So the market cap is $2.168 trillion. And now the market, oh, it went to zero.
GM, welcome back to the channel. So some market thoughts in today's video. We're also going to talk about M2 money supply, some of the easing that is ongoing, and what big players have been doing in the market as of late. Going to finish off with a DeFi pick at the end of this one as well. Quite a few of the subject matters we're going to speak about here. We went into real depth in the Round Trippers podcast on BLOCMATES just earlier. Check out the link down below for access to the meal deal. So that is the subscription service you're required to watch that on a weekly basis, amongst a shit ton of other contents. That is the end of the plug. Let's jump into the video. So Bitcoin here has bounced. We are up from the Pico bottom of 49.6 all the way up to around 56k as we stand. Of course, we're definitely not out the woods. I've seen quite a few people drawing this kind of trend line through here, saying, look, there is a big kind of megaphone structure. We wicked below, that has been bought up. That is quite generous to be given that to BTC. The structure overall doesn't look great, but we're kind of clinging on here. So got to give it a bit more time to see if this is a real digging our heels in moment or not. And I think this is going to depend on what Tradfi does. And we'll look at those charts in just a second. But overall, with this kind of big dip down, a lot of people now, I believe, will be stuck in cash, having sold. And potentially there could be a chase if this does actually conclude higher. So quite an interesting market dynamic there. If we look at SPX weekly, you can see this area that was kind of a support for me. We broke through it, but we've now come back up to retest it. And then on NASDAQ as well, probably should have put a trend line in across here somewhere. Similar scenario. Yesterday's big dump off has started to be eaten up, and that is on a weekly candle there. So we'll see what happens. But overall, dollar continuing to drop, which is going to be more bullish risk assets. This is Bitcoin's open interest on Coinalyze. So a few questions about this one. The open interest has been wiped and reset here. We had over $1.2 billion worth of liquidations. All the longs pretty much got rinsed, which was incredible. Not only on Bitcoin, but on ETH as well, because ETH's decline was outrageously big. Let's just look at the ETH chart real quick here. ETH got absolutely tanked. So back on Friday of last week, I believe it was, we dipped under 3K and I was like, wow, ETH under 3K is cheap. It got a lot cheaper. So on the wick down, 2,124. And with that, all the longs, there was a ton of longs down here that seemingly got hunted, and the market makers must have made a ton of money off the back of that. But if we just look at this data here, what we can see is this kind of peak area. So around 20 to $21 billion of open interest. Every time we've got up this high here as well, there's been sell-offs. So this is quite interesting. Probably try and monitor this a bit more closely just to see if we just do get sell-offs around these numbers, around 21 billion, maybe a good idea to take some off the table at that point to bid the dips down. We're now reset down to around 15 billion in open interest, which I think is a lot more healthy. But last market cycle, I think it was around the number we're at now, like 15 bill is where we were seemingly getting to with open interest, and then they would get a big leverage washout would occur from there. So maybe 21 is our new number. We'll continue to monitor. Liquidations wise, let me just pull this up on my daily chart and drag it over a bit. You can just see that it's literally at the extreme of the actual chart here, the liquidations. So is that max pain because they've literally taken off all the longs from the board and we should go up from here? We'll have to wait and see, but we're definitely not out the woods, but there are some positive signs, especially with stocks having a bit of a rebound here. Now, Alex Kruger has been a really good follow through this in terms of his analysis has been pretty spot on, and out of the macro talking heads, he is one of the better ones to follow. So he says, the debacle that we saw is obviously macro driven rather than crypto specific. So I actually think this is a good thing in terms of when we've had crypto specific like contagion events, they've been pretty bleak moments for the industry, but if it's macro related, something that's outside of our control, hopefully a bit of a flash crash and that's it, fingers crossed, well then we can kind of look past crypto's weakness and say macro is going to potentially clear here. We've had a bit of a change in regime, and as he says, it wasn't a policy mistake by the Fed not cutting fast enough, but Japan hiked, a bit of an offsides move apparently, and the fact that the Fed hadn't got in and started cutting is obviously the reason why we've had this kind of macro spasm, is what Raoul Pal's been calling it. So chart shows where the sell-off started back here. That was last Wednesday after the FOMC when the Nikkei opened, and then a big sell-off in the Nikkei. And then we've had a bit of a bounce back here today as well. So just pulling up the chart here, you can see 38,000 points all the way down to 31,000 points, then a big jump up to 34.7, and I believe it's closed now at 34.6. So pretty crazy moves for the Nikkei over in Japan. But he does say when it comes to US data here, the focus is now on the job market, because bad news is actually bad news for markets at this point. So pay attention to the initial jobless claims this Thursday. Not generally market moving, but this is something to have your eyes on, and we'll see what happens with that. And then 16th of August, state employment data will be out as well. So a few key dates there that Kruger points out. Now, in terms of buying the dip, so this is Tradfi markets here. They're saying, look, retail wasn't buying the dip, it was the suits. Retail minus 1 billion net selling. So retail out by 1 bill, institutional plus 14 bill in net buying. Now, an interesting factor. So they're saying, look, the retail public, the plebs, sold the bottom and the suits bought it up. But did you see yesterday, a load of these retail trading terminals went down for hours and weren't working. So people seemingly couldn't even buy the dip if they wanted to, which is pretty damn crazy. And also this highlights a real selling point of DeFi, the fact that DeFi never goes down. We trade 24/7, 365 without hiccup. You know, I think this is something to people could take home that information and be like, all right, maybe crypto is somewhere we want to explore, because we were screwed over here by those trading terminals. Now, we've also seen another hedge fund come to the market and announce they've got Bitcoin ETF holdings. Europe's fourth largest hedge fund, Capula Management, discloses a 500 mil spot ETF holding, which is pretty good. So institutional bid is here. And this one comes into play tomorrow, which I think could be very interesting if you just think about incentives. Morgan Stanley told its army of financial advisors, apparently 15,000 financial advisors, they would be eligible to start promoting Bitcoin exchange traded funds, so Bitcoin ETFs, as soon as this Wednesday. So that is tomorrow. So the incentive of the financial advisor is, of course, to make commission. They'll be able to take commission on these ETF sales, and as of tomorrow, they can start selling Bitcoin ETFs to their clients. 15,000, an army of people trying to shill the likes of IBIT and FBTC. So again, a bit of hopium in this time of pretty crazy price action. We've also got M2 money supply. I've seen some charts suggesting it is about to break out. Over in China, they are easing like crazy due to a deflationary bust. And Marty Party with this one saying, as of tomorrow, which I believe is today, as I think he's in a different time zone. So as of today, 6th of August, 2024, the US Treasury will start Treasury buybacks again to the tune of $30 billion per month. So this is, of course, an injection of liquidity. So that is positive. Only 30 billion, which sounds like a lot, but compared to their kind of peak degeneracy in 2021, I believe this was up to like 500 billion or something per month, which is crazy, crazy numbers. But you can see kind of a changing tide here for the money supply. Then we have this, JP Morgan's global FX strategy co-head saying the Japanese yen carry trade, The unwind for that is around 50 to 60% complete. So can see there's two ways. We're not out of the woods, so there could be some more tomfoolery in the charts, but I do believe that would be an opportunity. We don't know how much contagion could be from this as well, though. There's going to be a lot of unknowns. And if you're like me, we don't know that too much about macro and stuff. So it's a pretty of a hard one to judge, but the fact maybe 60% is done, I'd rather see that than them coming out and saying only 10% done, which would probably put the fear of God up you a bit more. So yeah, you could read this one both ways, but in terms of that yen carry trades, a trade that has been going on for many a year, almost 2 decades, because for 17 years, Japan had a negative interest rate. So you were actually paid to borrow money, and then people could just lever that up, take their JPY, exchange it for USD, put it into maybe US stocks, maybe into T-bills, whatever they wanted to do. So that kind of unwind has to on-go. But interestingly enough, there's some bull and bear points around that one. Now, I think in the crash as well, one of the ugliest and one of the strongest charts, Mr. Q says here. So ugliest chart here is Ethereum, which does look quite trash, even though ETF buyers net inflows as of yesterday, which is positive for ETH. And we do want to see an ETH turnaround. We don't want to be dunking on this thing. But did we see, because this is the Sol ETH chart, Sol ETH pushing the highs yet again. And we are just in a bit of a bounce territory right now. We're not trending again. Have there been mass rebalancing by people during the dump? Because that's probably one of the best times to do a rebalance, move out of weaker stuff into stronger stuff. I think that this chart here is actually screaming that. So that is my kind of opinion on this. Now we know, in terms of big boys, Jump sold pretty much all of their ETH now. And they've also cashed out to Coinbase Prime in USDC 440 mil since then, July 24th, which is crazy. So these guys have extracted tons and tons of funds from the crypto markets now. Presumably they have ended their crypto market making business and maybe even just shutting up all of their crypto related stuff here, because as we saw, they were just dumping ETH over the weekends. And maybe as well, obviously, Sol ETH not looking great because they were just selling all of their ETH, making that weaker. Presumably they weren't selling their Sol, but we don't know. We would expect they do have Sol bags. Now, in terms of an overhang from Jump here, so this is jumpcrypto.com/Firedancer. So we know the second validator client was being built by Jump, but we haven't heard a word from them, not a single peep, and they've sold all their crypto. Is the Firedancer upgrades now not coming? We don't know. We can only speculate that if Jump are doing what they're doing with their actions, it probably speaks volumes. Maybe this doesn't go ahead. Now, I think this is obviously a bit more bearish in terms of an item on the roadmap for Sol wouldn't be complete. One of the bigger validators, if you look at the fees, Jito have been doing really well. Maybe Jito could pick the ball up and run with this. So I am actually holding spot Jito, which is a new addition. Check out the link down below for round trippers and the BLOCMATES meal deal. You can see my full port on there. But this could be a bit of an opportunity for Jito overall. But yeah, there's going to be some effects of Jump Crypto pulling out of crypto altogether if that is the case. But no communication from them. We can literally just put the tinfoil hat on and see what their actions are on chain. And by the looks of things, they've cashed up and buggered off. Then my last thing to look at here, AAVE. So AAVE is trading up $100. Market cap $1.5 billion. Pretty much all tokens now circulating, so no inflation. They've got a fee switch proposal potentially could be approved, which would be good. And it is the most lindy protocol in DeFi. So I think if Tradfi are going to start buying up DeFi bags, 1.5 billion is not a big market cap. Well, then I think AAVE potentially is one of the better picks, because when you just think of DeFi, you think of AAVE. It hasn't been hacked. It is the biggest money market. It is going cross-chain. There's just a lot of positives going for it. And that chart, that is over a 1 year period, I believe. It looks like it is consolidating and going up and to the right slowly over time. So I haven't got a position in this as of yet, but this is definitely on the radar. And I know a lot of boys have been looking at this one as well. So we'll keep tabs on this. Maybe in the not too distant future, I will be an owner and a bag holder of the AAVE token, but we'll wait and see. Anyway, hope you enjoyed this one. Check out my link down below. We'll see you in the next one. Peace.